With the stock market continuing to set all-time highs and with many experts calling for a big crash, it can be hard to know what we should be doing as investors. This is the Buffett Indicator, made famous by Warren Buffett, and it measures the value of the stock market divided by GDP. This was the reading just before the dot-com boom and crash, but this is where we're at today, and it's measuring an all-time high. So, should we be buying stocks at all-time highs? Should we be buying bonds instead for protection? Or maybe we should be looking at other asset classes like cryptocurrency or Bitcoin? Well, the good news is that we can get all these questions answered by a true investing legend. Warren Buffett is arguably the world's greatest investor. With a net worth of around $85 billion, he clearly knows a thing or two about investing. In this video, I'm going to be breaking down one of his more recent interviews to get the answer to these questions. As always, if you do find anything useful in these videos, then drop a like. That would be much appreciated. Okay, sit back and relax, guys, as we get some excellent investing wisdom from the Oracle of Omaha himself, Warren Buffett. So here is what we've got coming up, and we're going to break this interview into 4 parts. First, we'll find out, should we be buying stocks right now, or should we wait for a correction or market drop? We'll then ask Warren Buffett about bonds. Are bonds a good investment? We'll then ask him about crypto and Bitcoin. Is he a fan? And we'll finish with the performance against the S&P 500, asking the question, why isn't Warren Buffett now able to beat the S&P 500?
First day I bought stocks was March 12th, 1942. And the stocks were down about 2% that day, as it turned out. Unfortunately, I bought in the morning, so when I came home in the evening and my dad told me the execution price, it was down 2%. But if you're buying a business, and that's what stocks are, businesses. In fact, people will be better off if they say, I bought a business today, not a stock today, because that gives you a different perspective on it. Then presumably, you're going to buy a farm, if you buy an apartment house, if you buy a business, you're going to own it for 10 or 20 or 30 years. And the real question is has the 10-year or 20-year outlook for American businesses changed in the last 24 hours or 48 hours? And you'll notice many of the businesses we own, partially own, American Express, we've owned it for 20 years, Coca-Cola, we've owned it for 40 years. Those are businesses. And you don't buy or sell your business based on today's headlines. And if it gives you a chance to buy something that you like and you can buy it even cheaper, then it's your good luck, basically. I don't think anybody knows what the market's going to do. I think you do know whether you're making an intelligent purchase at a given price. Everybody, when they buy a stock, if you're going to buy, say, General Motors that has 1,400,000,000 shares out, you should be able to take a yellow pad like you have there and on one page say, let's say it's selling for 30, it isn't selling that low, but that'd be 42 billion. You should say, I am buying the General Motors company for $42 billion because, and you should get it on a piece of paper. And then if you want to have a separate piece of paper, it says, I think I know what the stock market's going to do, so I know whether it'll be higher or lower. But you don't. Forget about the market. If you can predict the market, you don't need to read balance sheets. You don't need to read anything. You certainly can't predict the market by reading the daily newspaper. That is for sure. And you certainly can't predict the market by listening to me. But you're buying businesses. And people, because they can make decisions every second in stocks, whereas they can't with farms, they think an investment in stocks is different than an investment in a business or an investment in a farm or investment in an apartment house. But it isn't. If you get your money's worth in terms of future earning power over the next 10 or 20 or 30 years, you're going to have made a good investment. And you can't pick them from day to day. If you can do that, you can, well, I haven't met anybody yet that knows how to do it.
So, trying to wait for a drop or a big correction, he says he hasn't met anybody who is able to do it. He said to not think about buying stocks, but think about buying businesses, as you never know what's going to happen 1 month, 6 months, 1 year from now, but with a 10-year plus horizon, then you'll probably be doing very well. And above all else, don't make investing decisions on today's news headlines. So basically think long term and you should be fine. So now we move on to bonds. We're told from reputable sources that as we get older, we should be buying bonds. Also, we're told in a bad economy that bonds are a great way to diversify and help with the volatility. So, does Warren Buffett like bonds? Let's find out.
Edgar Orrin Smith set out to write a book on bonds versus stocks. And he said if he went in with the idea that bonds would be a better investment in times of deflation and stocks would be a better investment in times of inflation. And the first line of his book was to say that he'd been wrong. But he had enough sense to look at his evidence. I think Darwin said if you found evidence that was contrary to what you already believed, write it down in 30 minutes or your mind will just block it out. I mean, people have a great resistance to new evidence. And he said, if a stock yields 4% and a bond yields 4%, which was what he was talking about then, the stock was going to outperform the bonds because there were retained earnings that were building beyond that yield. And that had been true for a long, long time, but nobody paid any attention to it. We don't get rich on our dividends that we receive, although we're happy to receive them. We get rich on the fact that the retained earnings are used to build new earning power, repurchase shares, which increases your ownership in the company, and Berkshire has retained earnings ever since we started. That's the only reason Berkshire's worth a lot more, is we retain earnings. A stock can be a good buy or a bad buy. A bond can be a good buy or a bad buy. It depends on price. If you look at the present situation, we've talked about this before, that you get more for your money in stocks than bonds. That doesn't have to be the case. I mean, but it's usually been the case in America, very usually been the case. And if you buy a 30-year bond today with a yield 2%, you're paying 50 times earnings for an investment where the earnings can't go up for 30 years. Now, if somebody said, I want to sell you a stock that's at 50 times earnings and the earnings can't go up for 30 years, you'd say that doesn't sound very good. Stocks are way better than 30-year bonds. I mean, that's clear. And that's one of the alternatives people have. People really have three basic alternatives. Short-term cash, which is an option of doing something later on. Long-term bonds or long-term stocks. And stocks are cheaper than bonds.
So, very interesting. It looks like Warren Buffett is not a fan of bonds. He said that we don't get rich from the dividends, which is what some businesses and things like bonds pay out. We get rich from the retained earnings. Retained earnings is basically all the money that's left over. When everything's been paid out and all the dividends, etc., it's the money that's used to reinvest and grow the business. And this is something that bonds can't do. He mentioned that with bond yields at 2%, that is 50 times earnings. And this basically means it would take you 50 years to get your money back. So if someone came to you with a stock and said it's at 50 times earnings and you're not able to grow it, then he said that's actually not a good thing. Which now moves us on nicely to cryptocurrency and Bitcoin. It's the new kid on the block. It's been growing at an exponential rate. So is Warren Buffett a fan of crypto and Bitcoin? Let's see.
You don't own Bitcoin.
No, I do not own one. I don't own any cryptocurrency. I never will. And, in the end, I may start a Warren currency. Maybe I can create one and I'll say there's only going to be 21 million of them and you can have a little ledger sheet from me and everything that says you have it. And you can have it after I die. But you can't do anything with it except sell it to somebody else. And the interesting thing, of course, is that Bitcoin's been out there a long time, and people talked about how it would be used in various kinds of exchange. But none of our companies are doing business in Bitcoin or anything. Bitcoin has been used, I think, to move around a fair amount of money illegally. So the people
or maybe in countries where you have a hard
so
time
the logical move from the introduction of Bitcoin is to go short suitcases. because the money that was taken in suitcases from one country to another, suitcases will probably fall off in demand. I mean, so you can look at that as the economic contribution of Bitcoin to the society.
So I think it's fair to say that Mr. Buffett is not a fan of Bitcoin. Quite amusingly, he recommends going short on suitcases, as these businesses are going to be dropping with this new way to send illegal money. For me, this is actually very similar to the reasons why he doesn't like gold. He believes that if it's just something that you hold and it doesn't pay a yield, and all you're doing is waiting for it to appreciate, then he's not a fan. Very similar to gold. I think it's fair to say that Warren Buffett is a stock market guy. Okay, and finally, Warren Buffett is very well known for being able to get a 20% return per year, and this is double the historic average of the S&P 500. However, what some of you might not realize is that recently, in fact over a 1 year, 3 year, 5 year, and now 10 year period, Warren Buffett is no longer able to beat the S&P 500. He was confronted with this fact, and this is what he had to say.
Berkshire has now underperformed the S&P 500 on 1 year, 3 year, 5 year, and 10 year marks.
Yep.
Is that because it's too big, and will it ever be able to outperform the
Well,
S&P?
certainly being too big is part of it. But I would say this, during that same time, I mean, last year, we achieved, now I don't like it, GAAP earnings very well, but we achieved the highest GAAP earnings of any company in the world has ever achieved that's investor owned. And we have the highest net worth of any company in the world, investor owned, any company in the world. So I would say, related to safety of principal over time, I feel good about it. And I feel good about the fact that 99% of my money's in it, and that it will be the source of all the philanthropic contributions that are made for 15 or dozen years after I die. So, but I do not think it will be in the top 10% of stocks performing over the next 10 years. I don't think it'll be in the top 15% of stocks performing in the next 10 or 15 years. I also don't think it'll be in the bottom 10% or 20% or 30%. So, but our ability to have a huge edge over the market generally with a $550 billion market value, it's just, it'll be minor, but it'll be done in a very, very safe manner.
Is an investment in the S&P 500 a better investment than Berkshire?
It could be. You know, on balance, I think we'll do a little better, but it'll be minor. It depends on the kind of market we're in. If we're in a down market, we're going to beat it. I mean, that's simple. And sometimes we will be. The last 10 years we haven't been. But over 55 years it's worked, and it will continue working, but it will not work at all like it did when we were working with $100 million or $1 billion. There's no question about that. But we've got good businesses, and we won't be in the bottom quartile, I promise you that.
So yes, it's official. Warren Buffett is no longer able to beat the S&P 500 index fund. In his defense, he said he was very pleased with the company's GAAP earnings. GAAP means generally accepted accounting principles. He said Berkshire Hathaway has the best GAAP earnings in the world, and this is for an investor-owned company. And interestingly, he did say that an S&P 500 index fund may be a better investment than Berkshire Hathaway moving forward. So there you are, guys. That was Warren Buffett's thoughts on what we should be doing right now and trying to time the market, whether we should be buying bonds instead for protection, his thoughts on crypto and Bitcoin, and now underperforming the S&P 500. So I hope this helps with your investing for this year. In fact, if you did find anything useful in the video, be sure to drop a like. That would be much appreciated, as every like does help. If you haven't yet subscribed, be sure to click below and join us. I do have some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.